Is the market trying to tell us that rates have run too far, too fast?
Well, it's counterproductive, clearly. I mean, if he had wanted a low-interest person, he could have reappointed Janet Yellen. No problem. He appointed Jay Powell, who is a good central banker, and I think it was overdue that the Fed was going to normalize policy. I mean, remember that the real Fed funds rate, the rate adjusted for inflation, is still negative in the 10th year of an economic expansion. And the way the Fed is behind the curve, then the neutral rate is probably around 3%. We're at 2.25%. So there's more to come.
And the markets already knew that rates were going up in the United States. So what's spooking investors the most?
You know, it's always, you get corrections after a big move. For a while, I think the market had become detached from fundamentals. You had this upward move, despite all the problems that we have, you know, Fed tightening, trade war, and rising inflation, and so on. So the correction had to come at some point. It's a little bit like in January, February of this year, where you had a little bit of a rise in inflation, higher long-term bond yields. It seems to be playing out in a similar fashion.
Vishnu, what's your thoughts? Do you think this reflects the technicals rather than the fundamentals?
Well, I have to say, first of all, that I don't know much about technicals, so I will not delve into that. But there are some fundamentals in this. I mean, we have to bear in mind that there's a shadow tightening going on, a 50 billion reduction in the balance sheet per month, and you've got interest rate hikes coming along. And you made the good point, which is markets already saw this coming. So it's not about going in with their eyes closed. And to defend the Fed, they also have to react to any lingering effects, albeit from a late cycle fiscal stimulus. Yes, it's going to fade, but there will be some knock-on impact that could linger. So the Fed has not actually surprised markets per se. But I guess global events did not help. I don't think markets foresaw that oil prices would rise to $85. At one point. And probably they couldn't predict how far the trade war was going to go, and probably they were also a little unsettled much earlier when China said they're not going to negotiate until midterms are over. So you put all of this together, and then you get spooked by your own shadow. The momentum builds into itself, and people say, hang on, maybe the valuations are not right.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.